Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it. Good morning, everybody. Cowboy here. It is the March 24th, and it is 9:10 a.m. A little bit of a late start today. I ran over on a prior show. That's okay, though. There is data coming out today, and it's not going to come out for, I think, like 2.5 hours. So the market's actually really quiet. We're going to pay attention to the NASDAQ. We're going to talk a little bit about what Trump's announcements did to the market and what the market may want to do in general, right? So what I mean by that is that that's two different things. There's what the market wants to do, and there's what Trump's announcements did to the market. So I think it was like Friday after the market closed, might have been Saturday morning. Trump made a bellicose announcement. We're going to go all the way, or we're going to bomb them, or whatever it was, made it sound like we were going to be very involved and, hit Iran hard and all these things. Well, what's been going on with the market, let me zoom out to a higher time frame, is that the markets don't like what's happening in Iran right now. Now, they were able to hold it up for a good couple of weeks, right? Looking at the daily chart, going back to early February, the market really didn't move much, went back and forth. And then on the 9th of March, you saw this green candle kind of stab down below the range that it was in, right? So the market was in a range dictated, or at least depicted, by this square right here. And that was obeyed very strongly. And then it really dipped down and got pushed right back up. And now what we're seeing is price starting to make its way down out of that range. And that right there is a bearish sign. You have higher highs, higher lows. You did get a nice spike up right here, but now the market continues to make lower highs, lower lows. I know I just said higher highs, higher lows. I meant lower highs, lower lows. Now, will it continue down, right? We don't know yet. We don't have that information. We don't know until it happens. But we do have some clues according to the algorithms right now. Two things are going on. You have the pressure from the war. You have oil prices that are high right now. It's above 100. You have uncertainty in the market, right? The market's a little bit rocky. So when that happens, there is a lack of investment because markets like certainty. People who put billions of dollars into the market want to have an idea of where that's going. And when there's a lack of certainty because we are in what could turn into some kind of nuclear war or World War III or what have you, people tend not to put their money in the market. Now, we're not at the point where just not putting money in the market is benign. Money has to continue to flow into the market to push it up because of the way the system is at this point. Markets, in my opinion, I don't even know how you value markets at this point because it's all debt and fake money. But what we do know is that there needs to be a continuous inflow into the market to keep it up, right? So if money simply stopped flowing, markets would fall. And that's the result of just systemic weakness because of the way everything works. We're not going to get into that. But what we are going to get into is what does the market want to do algorithmically? And this stab down here that ultimately ended at, what is this, 23,800, that move down, that actually broke below the move down that happened in November, at the end of November, which was right here. So we even saw a break below that level, although it did end up closing above that low, right? But that's an important level structurally. So where's the next level that's important structurally? Well, we're going to back out even further to the weekly chart, and we're just going to study this in a minute. Now, if anybody in the comments wants to see something besides the NASDAQ, let me know, right? I'm happy to pivot here. I can make this quick. In the meantime, we're going to focus on the equities market because the equities market is going to control everything else. If equities fall, everything falls because everybody's going to sell their positions. That includes silver, that includes gold, everything. Now, those moves down will be temporary, but they will be precipitous if, in fact, the equities market falls really hard, right? Everything falls. So understanding that, it's very clear on this chart, if you know anything about market structure, that this level right here is important, right? It was a pullback on the way up, and that level is 22,479. Let's just say 22,480. Now, if price starts to fall, and it very well could, this look is bearish. What we're seeing on this is actually, I believe, an Adam and Eve pattern on the inverse, meaning that you have an attempt to break a high, right? So the market's made a high right here. There is an attempt to break that high that got rejected, and the top is rounded. The shape is a rounded top. I believe that's an Adam and Eve formation. I might have to look that up. Either way, that is not a healthy look. That means that the market tried to break the high and couldn't, and spent a fair amount of energy doing so. That said, there's probably a lot of sell-off in this area. We did have one spike up in attempt to rally, which failed right here, and that was on the week of the 26th of January. So this look right here headed down is bearish, and we're at an important support. Now it might be the price needs to fall further in order for it to grab liquidity and head back up. So we could be seeing what ideally is a relatively either a very fast move down and then forced up, or a very slow, uneventful, sort of controlled move down with hope created and all this, and then eventually it moves up. But one of those is better than, or either of these is better than the alternative, which is kind of a medium move down, or just say a move down that doesn't come back up. Of course, that's by definition not good for the market. A quick move down, push back up, doesn't give people time to freak out. They get a couple of days of worry and then it's back to normal. And it's like, oh, okay, that was just a glitch, whatever, who cares, right? But in an extended move, they don't really feel it. It's like, oh, it's going down, but and then you maybe get like a quick grab and it goes up and it gently kind of gets felt. But if you get a hard move and it doesn't come back up, kind of goes like this and stays down, even kind of pulls one of these, that's where people begin to get a little bit worried. So that's just the way that things go. Now, what does it want to do? What do the algos say? Well, I've been saying for weeks that the market is vulnerable, right? I've been saying for weeks that the NASDAQ is vulnerable, and it is so at a high time frame. So on a weekly chart, just looking at the metrics here, like we could have another week or two or down, even if Iran like stopped tomorrow, even if the Ayatollah came out and, they shook hands with Trump and all that, there's still a decent probability that this is going to have to reset down to this 22,479. I think that is quite likely. I think they also may need to let that happen so that they can bring it back up, maybe wash out some profit, load up down here. And I say they, I mean the big players. They may need or plan or take advantage of, or all the above, for price to head down to this area faster, slower, whatever it is, and then have it come up in time for the midterms. And I do believe that if they can, they will juice it up and push the market up for the midterms. But what happens in between now and then, I mean, that's hard to say. I think that if they want to control whatever happens between now and then, they need for the hostilities to quiet down, though. So we got to have the Middle East calm down. And you have Australia now, like with gas pumps that don't have gas, and you're starting to see the effects of the war in a way that's upsetting a lot of people. And V the Gorilla predicted this like weeks ago for Algo Factory, right? So we kind of knew this was coming, and we knew the way that the climate is. We knew that private equity and important people, government people from a lot of different countries started to say, hey, let's wrap this up. Let's calm this down, throw some water on it, whatever that might be. So what Trump did on, Saturday or Friday, whatever it was, and then what he did yesterday by kind of saying, oh, well, actually we're close to making a deal, or whatever he said, that's just short-term manipulations, but it's also maybe kind of putting the brakes on things as well. That's the NASDAQ. There is some data coming out, like I said earlier, at 9:45 a.m. EST. So that's, I think it's PMIs. Let me see what it is. Give me 1 second. I'm flash to a screen that you can't see. Yeah, it's PMIs, manufacturing and services data. So that's going to come out, and unless it's really remarkable, it probably won't affect much on this time frame of the chart. So I'll take a look at Bitcoin. So you're looking at a weekly chart now, right? This very high time frame, Bitcoin coming from its top. And what it did was, let's go just erase all this. Bitcoin from its top, at least its top so far in the current cycle, came down, made a pretty classic bear flag, came down, making another classic bear flag. Now, will it come up? It could. It could. But right now, if I were to look at the entire stack, we could see some kind of a bounce here. It's still possible. But the longer this goes without seeing a strong move up, the less likely it is to go up, right? So whatever bounce that is going to happen probably needs to happen soon. And my thesis remains unchanged. 80,000 is like kind of a decent level for price to go up and kind of touch, grab liquidity, and head down, right? So my targets were 74, 78, 80, and then probably like I think 83, 84, right? And the higher you go, the more risky it gets until price breaks 97 and really truly 100,000. If price can break 100,000, you're going to get a lot of bulls entering the market. You're going to get a lot of people thinking that, oh, we're going to see new highs, and while that's possible, it might also be a bull trap. If I were just to give my thesis, I would say that price is headed down as low as kind of the 20,000s area, and it'll happen. Let's see, what are we, March? So it'll happen in like 6 months, maybe, 7 or 8 months. Probably by November, we'll see price below, most likely below 50,000, and quite possibly below 30. That's what I think is going to happen. And it might not be as violent as what we've seen, not as volatile. You might just kind of see like, a move down, and then it's just kind of slowly sloughs. And you get a strong move, and then it bounces, and then a strong move, and then it, just very typical bear market pattern that we've seen over the years, right? So that's probably what this will look like, but we could see stronger pop-ups than anticipated in the meantime. That's my Bitcoin thesis for now. And that'll change if new data comes in and says that it should change, right? I do everything based on the data at the time. That's what it looks like right now based on the data we have at this time. Thanks for watching. Take a look in the description. Like, subscribe. There's a free algo in the description. Click that link. And it's a very short, very simple video where I build an algorithm. You see me build it. And I think the whole video is like 15 minutes or something. And then I turn that algo into code so you could actually have something like this on the screen, those little arrows right there, right? And then once you do that, you can actually connect it to your brokerage so it can trade while you're not even at the computer. I'll show you how traders do that. Of course, before you do that, you have to optimize the algo for whatever you're trading. It's not something you just simply have it trade for you, right? You need to actually do the work to make sure it's profitable for whatever you trade, because every asset class and every asset trades differently on different time frames. So all that said, thank you all for watching. We're going to go over to the private live lab, and we will see you tomorrow. Again, apologies for the late start, but just had a late start in general today. It is what it is. And I'll be back tomorrow, 8:30 a.m. EST for another live lab. If you have something you want to see, make a request in the comments, and we'll go from there. Thanks for watching.
Join us or die.
Just kidding. You're not going to die.